The stock-to-flow model was created in 2019 by an analyst known on Twitter as Plan B. The model presents the relationship between the actual availability and the production flow. The graph is on a logarithmic scale, in which various data are reported, and it describes the past trend of prices and its future projection. It's immediately evident the large-scale correspondence of this trend with what the model suggests. Comparing to other scarce goods such as gold and silver, we see that the gold has a stock-to-flow ratio of 62. It would take 62 years to produce the amount of gold available now, while silver has a value of 22. Doing the calculation for Bitcoin, we have a stock-to-flow of about 50, given the halving that took place a few months ago. So we are on the same order of magnitude as gold. The current supply of 17.5 million bitcoins, excluding the lost ones, must be divided by the annual production of about 350,000, resulting in 50. This mathematically demonstrates the fact that Bitcoin is a scarce commodity comparable to gold. Plan B has developed the single unit price chart over time, and we can see how, at the date of this video, it has remained fairly faithful to what actually happened. Considering that the halving takes place every 4 years and it determines the halving of the Bitcoin issue, we can calculate with relative accuracy that the stock-to-flow ratio will double about every 4 years due to the fact that the maximum achievable quantity is already established inside the Bitcoin code. By simply making a projection using the available metrics, we can say that with the stock-to-flow equal to 50, Bitcoin should reach around $1 trillion of total capitalization, with a corresponding value of $55,000 per one Bitcoin. The resemblance to the St. Petersburg Paradox. This model finds similarities with the St. Petersburg Paradox, in which it describes a particular gambling game based on a random variable with an average payout of infinite value. The St. Petersburg Paradox is resolved by also taking into consideration the concept of marginal utility and the fact that the resources of the participants are limited. Here we can see the similarity with the fact that the number of Bitcoin issued can never be more than 21 million, which will be reached around 2140. Therefore, the resources of the participants are limited. Let's take a classic example, a sliced cake. The first piece of cake would be very appreciated. Interest would be very high to understand if the cake is good or not. Expectations are high, and still there is a probability of a lot of space in stomach. The increase in utility that the second piece of pie would generate, although substantial, would certainly be less than the first, and so on with the third, fourth, fifth, etc. It is reasonable to imagine that at a certain moment the person will be able to feel full. Once the satiety point is reached, any other increases in the consumption of the good, in this case eating additional slices of cake, will probably bring this utility, which will decrease the level of individual satisfaction. At the point of satiety, the marginal utility is nil. The consumer is indifferent whether to eat another piece of cake or not, and its level of utility is maximum. The latter part nowadays cannot be easily deciphered, as the time factor and game theory don't allow us to read the future. From a mathematical point of view, the average winning outcome with infinity expected value is correctly calculated, and the contrast with common intuition is a recurrent feature of paradoxical behaviors of infinity. In other words, it is perfectly consistent to accept the infinitesimal possibility of an infinite win, such as to balance any amount paid in the infinite times the win is insignificant. Conversely, for students of social science and of economy, this paradox has been a powerful stimulus to construct a theory of expectations and to introduce the concept of marginal utility and the weight subjectively attributed to probabilities. In conclusion, the stock-to-flow model applied to Bitcoin has a reason to be taken into serious consideration, as it has element of scarcity, which is also present in gold. The same model is considered by some internationally renowned institutional investors who are progressively entering in the world of cryptocurrency, converting part of their liquidity into Bitcoin. Given the limited number of data that we can analyze, we are talking about 10 years, the stock-to-flow model should not be taken literally. It must always be accompanied by technical and fundamental analysis. Any external event, political, social, geographical, hygienic, etc., could have an impact on the model. However, if people enter Bitcoin more and more en masse, there will be that effect of global acceptance or network effect that will allow Bitcoin to have global recognition, like gold has, as a scarce and precious good, regardless of linguistic, geographical, and cultural diversity. Also, we must consider the arrival of revolutionary companies such as Starlink, which promises to create a dense network of small satellites which will allow the entire population of the globe to have access to the internet, whether it's via computer or mobile. This will open the usage of Bitcoin and cryptocurrency on global scale. Bitcoin was designed precisely to be the global digital currency on the internet that can be used anytime, anywhere, by anyone.